Checkpoint is presented by GM Pharma, the first international multinational pharmaceutical company in Georgia. GM Pharma, to serve those who need it most.
Last week, the IMF in Georgia held a presentation of the main findings of Regional Economic Outlook. Here are some highlights as presented by Selim Cakir, IMF Permanent Representative in Georgia.
Relative to our earlier forecast, the outlook has improved due to several factors. One of them is war-related migration and capital flows impacting the consumption and activity. At the same time, tourism has been stronger, in particular in Georgia, relative to our forecast. And also this middle corridor shift of trade towards the CCA region is also having a positive impact. At the same time, the global risks have increased. That is impacting the global inflation, is having an impact on the region's inflation. Inflationary pressures are higher. We also see that there is a synchronized tightening by major central banks, and this can impact debt stress. It's already impacting the debt stress of emerging market countries. Also, capital inflows are negatively impacted. And going forward, this is an area we follow closely. The IMF has revised its global growth outlook down to 2.7% next year. And this is the lowest since 2001, other than the 2008 global crisis and the pandemic year. So there are certain risks. There is a China slowdown. So this is all having an impact. These are all issues, of course, the war's impact on global commodity and food prices, remittances to the region. These are all issues and risks we follow closely. For this year, let me add that we expect Georgia to grow around 10%, and we expect some slowdown next year, growing at 4%, before recovering to a medium path growth rate of 5% or above.
Our reporter and analyst, Georgy Aronia, attended the presentation, and he will join me now to give you more details about the frequently asked questions at the presentation. Georgy, the floor is yours.
Hi, Elena. The presentation of the Regional Economic Outlook by the IMF is a big deal for the local business community, so it is no surprise that many important people attended the conference. Among the most interesting questions posed to Mr. Cakir was whether the coordinated tightening of the monetary policy by the Fed, European Central Bank and the Bank of England would have a spillover effect on the region and Georgia.
For the countries that rely on market funding, more market funding, right? Definitely the impact is higher. If nothing else, the rates, borrowing rates have increased. So far, initially we have seen some outflow from emerging markets that seem to have slowed down, which is good news. But I think for the region, for the sovereign, market funding carries less weight. There is more reliance on donor funding, which is on softer terms, right? Some of those donor funding is indexed, right? Even IMF funding is indexed STR rates, so when those rates increase, your funding will increase, but will not endanger debt sustainability. We would be worried if a major emerging market defaults, right? And that triggers a sell-off in overall emerging markets and starts a series of depreciation pressures, which in that case, you may have to respond with tighter monetary and fiscal policies. Now, good thing for Georgia is that I think your policy response during the last years has been the right one, in the sense that there was a windfall, so to say, but you built fiscal and external buffers. Your debt to GDP was reached at some point 60%, now it is down to 40%. So you have now some buffers to use if a negative shock happens. Similarly, central bank has been extra vigilant and accumulated reserves in good times so that you can manage some volatility if a negative shock happens.
Another important question posed to Mr. Cakir was whether the effects of the positive economic shock caused by the war in Ukraine have already withered off or will wither off by the end of this year, as according to the IMF, the economic growth will slow down to 4% in 2023.
Let me highlight that, the war-related inflows was a factor, right, in Georgia's economic performance, but definitely wasn't the only factor, right? One factor was, I think, the good macro policies in the years ahead of even the pandemic, that be it strong bank supervision, again building buffers, fiscal and external buffers, they all paid off. So these strong policy anchor will continue to remain support Georgia. This mid-corridor is there. We see even capacity constraints, and we hear more and more investment plans in Georgia on the energy sector and also on the logistical sector, among other sectors. Some of it will remain, but we don't expect a similar wave of inflows. Now, we didn't expect it before, then there was this conscription and another wave of flows, but, bearing a surprise, probably there'll be some mitigation. Hence our forecast of a slowdown, next year to 4%. And the policy response has been, as the governor highlighted, was assuming that this is a temporary shock. Part of it was positive, but that it's temporary. Hence, the policy response was building fiscal buffers and reserve buffers.
During the presentation of the Regional Economic Outlook, Mr. Cakir claimed that the implementation of structural reforms is crucial for Georgia. During the Q&A, I had the chance to ask Mr. Cakir to elaborate on the topic and to mention a few areas that required reforms the most.
On the structural side and on the macro side of the program that we support, of course, one target on the fiscal side is to bring deficit below 3% per the fiscal rule. We are working with the authorities. Actually, we like them to bring it closer to 2%, to have some more buffers that require, over the medium term, maybe some measures on the revenue side or on the spending side. But this is on track. Reserve targets are met. There are no issues. Of course, bringing inflation back to target is important. Now, on the structural side, the program and what we support has this state-owned enterprise reform. We see it essential. They account for a good chunk of employment and economic activity. And we agreed with the government on the main principles of a state-owned enterprise reform. The second element was the renewable energy support. We have been talking with the government for a long time on that. Finally, we reached an agreement. We want those renewable energy support to be done on a competitive basis, and that there is a program as to how to proceed with it. So I'm happy to say that we agreed on these main principles. Now, strengthening growth and making it more inclusive through education and training, addressing high unemployment and labor market mismatches, addressing the infrastructure investment gaps, improving the business environment. These are kind of all important targets of the government and also of the program. Other donors are taking a bigger lead on those issues, where the IMF is taking the lead on the SOE reform and renewable energy support scheme.
Thank you, Georgy, for very interesting insights from the presentation of IMF this week.
The Checkpoint is presented by GM Pharma, the first international multinational pharmaceutical company in Georgia. GM Pharma, to serve those who need it most.